Hello and welcome. This is Accounting 1, and today we're going to be working on Chapter 2. Chapter 2 is analyzing transactions into debit and credit parts. Now, debit and credit are two new words for you. So far, we have just been learning to increase and decrease. And debit and credit is going to be tied to those. So our objectives for this chapter are we are going to define all the accounting terms that are related to debits and credits, identify the accounting practices used with debits and credits. We will begin using the Taccounts to analyze the transactions in the debits and credits. We will analyze the business startup transactions, and we're going to analyze how transactions affect the owner's equity account. So, beginning with Lesson 1. Lesson 1, we're going to be using T-accounts. And we learned in the last chapter, a T-account is basically, it's called a T-account because it's shaped like a T. We have assets on the left, and they equal liabilities plus owner's equity. So to analyze the accounting transaction, we know that assets are everything we owe, that we own, and liabilities are everything we owe. And the owner's equity is the value of the business, or the difference between the assets and liabilities. Your vocabulary word, T-account, is just an accounting device used to analyze transactions. So in Lesson 1, we're just going to be going over some basics like this. So in Chapter 1, I told you we'd be taking notes on the same pages. Not yet. That won't happen until we get to Lesson 2. Sorry about that. So if we look at our T account, just like we had on the last page, assets equals liabilities plus owner's equity. We draw it on a T. We have assets on this side of the equal sign, or this side of the line. Then we have liabilities and owner's equity on this side. You guys have all learned, this is your left, this is your right. So it's important to know left and right on your T account because that's going to play a huge part. So here I've just broken it down. Assets on their own little T. They're on the left side of the line, and they also have a left and right. Liabilities are on the right side of the big T account. They have a left and right, and owner's equity has a left and a right. Vocabulary words. You're going to need to know that the account balance is the side of the account that is increased. So in Chapter 1, we talked about whether we're going to increase or decrease things. Now we're putting everything into the T. So we need to know that if it's increased, whichever side it's increased on is the side that's the account balance, or what we call our normal balance. So looking, and then debit is the amount that's always recorded on the left. So you can always think that debit and left are the same, credit and right are the same. Actually, if you have trouble remembering that, there's a catchy little, there's several videos on YouTube. If you look up the accounting song or debit credit song, it's always going, it's catchy. It'll remind you debits are on the left, credits are on the right. Okay? The place I do not want you to get confused about is debit does not necessarily mean increase or decrease, and credit does not necessarily mean increase or decrease. The only thing you can guarantee with the word debit is that it's on the left and credit's on the right. What happens with a debit or credit is going to depend on the type of transaction that it is, whether it's an asset, a liability, or an owner's equity. So, the basics. We have our asset left and right. We know that left is always going to be a debit. So I'm going to put debit. Right is always a credit. So I'm going to put credit here. Same thing with our liabilities. Left is a debit. Right is a credit. And with our owner's equity, left is a debit. Right is a credit. So you can see that it doesn't matter whether it's an asset, liability, or owner's equity. Debits are always on the left. Credits are always on the right. Okay. Then we talked about the account balance. This is our normal balance, or the side that's going to be increased. Now this is where it's going to get a little trickier. So with assets, you need to memorize this. If you don't get this now, this is going to make accounting very difficult for the rest of the year. An asset has a left side that's a debit, and that is also its normal balance. Okay. Liabilities, their right side is a credit, and that is their normal balance. And I'll show you a trick to helping you remember this in a second. An owner's equity, their right side is a credit, and that is their normal balance. Okay, so my trick is, if you look at this line here that's with the equal sign, okay, if it's on this side of the equal sign, which is assets, the normal balance is going to be on the left side of the T account. So assets are on the left of the equal sign, their normal balance is on the left. Okay. Liabilities and owner's equity, they are both on the right side of the equal sign. So their normal balance is going to be on the right side of their T account. Assets is on the left, normal balance is on the left, or the debit. Liabilities and owner's equity is on the right, so their normal balance is on the right side or the credit side for both liabilities and owner's equity. Okay, that is probably one of the most important things that you are going to be learning right now, and that's going to really be the key to the rest of the chapter. So, I drew out a really big, I hope we can see all this on the camera, a really big T account. Because what we need to know, and I'll go ahead and use my colors, assets, this is going to be any asset. So what are some of our assets that we've learned about? We've learned about cash, supplies, prepaid insurance, and accounts receivable. Okay? So I could just put that over here. Cash. I don't think you're seeing that. Cash, supplies, prepaid insurance, and any accounts receivable. Those are the assets we've learned so far. So any one of those assets, we could plug in the name right up here on our T account. This is their right side. Sorry, this is their left side. This is their right side. Left side is always a debit. Right side is always a credit. And for an asset, because it's on the left side of this equal sign, their normal balance is on the debit side. And so that means the left side, if we go back to our vocabulary, account balance is the side of the account that is increased, or the normal balance. So normal balance is going to be our increase. Draw an arrow here. And so if we want to decrease, we're going to do it over here. Okay, I did it with arrows. You could also put a plus sign and a minus sign here. So from now on, we're not using the pluses and the minuses in front of our amounts that we're putting in, because we're going to be just putting them on the correct side of the equation. So we don't need our pluses and minuses anymore. Okay, so I'm going to go to liabilities, and we'll do the same thing. So this is going to be any liability. They have their T account. And so far we've learned liabilities are going to be our accounts payable. So this is everything that we owe. Okay, so this is the left side. Make sure you're seeing that. This is the right side. The left side is always a debit. The right side is always a credit. For a liability, which side is going to be our normal balance? Well, if we look up here at the equal sign, liabilities is on the right side of the equal sign. So the normal balance is going to be on the right side of their T account. So this is going to be the normal. Okay. We also know the normal balance means increase, so we're going to be increasing here. And we would be decreasing on the other side. I could also do a minus here and a plus here. Okay. Moving on to owner's equity. T account. And so far our owner's equity, we've had capital, we've had revenue, we've had expenses, and we've had withdrawal. Okay, so this is the left, this is the right. Left is always a debit, right is always a credit. Which side is going to be the normal balance? Well, owner's equity is on the right side of this equal sign, so the normal balance is going to be on the right side. Which one will be the increase and the decrease side? We always increase on the normal balance. So this is going to be our increase. Decrease on the opposite. Here I'm just going to put a minus and a plus. Okay? So I can't quite fit the whole thing on the screen at once. But if you can understand this chart, this is going to make a huge difference in how you get along this year. You must understand everything on this page. Assets, liabilities, owner's equity, the debits, the credits, the normal balances, the increases, the decreases, and how to classify the accounts. These are going to be the main accounts that we use throughout the year. So know that cash, supplies, prepaid insurance, accounts receivable are assets. They increase on the debit side. Accounts payable is our liability, and it will increase on the credit side. Owner's equity is our capital, revenue, expenses, and withdrawal. And so as we're recording those all in owner's equity, they are going to, owner's equity will always increase on the right side. Later on, we're going to break some of these out and do something a little bit different with them. But for right now, this is what we need to know. If you can memorize this whole page, it's going to make a huge difference in your year. So that is all for section 1. Be sure you know your 4 definitions, that they're in your notes, your T account, your debit, your credit, and normal balance. You've got 2 audit your understanding questions, so be sure that you understand those. Tomorrow in class we will do work together and on your own and the application problem. See you then.